Hope you're doing well. Today it is, what is today? Wednesday, November 10th. So here for a quick recap of what's been going on in the markets, what we're looking at for the day, and how we might be trading things going forward. So anyway, let's jump into it. First things first, let me get over here. Markets, I'm a little bit late today. Everything takes twice as long for me with this arm brace thing on here. First things first, let's pop over here. You've probably already checked this. You know there's no high impact news coming up. We do have some news though coming out later today. The things to watch: bond auction, budget balance. But even there, I don't see it being highly impactful as you know that catalyst that really causes things to change direction. So we should be all right moving forward. And with that said, we just simply follow the method. Again, I can't reiterate this enough. We talk about the BTX method here because it is that quantifiable process that allows you to do things, approach the market the same way every day. With you've got a quantifiable reason for why you're making any kind of a trading decision. Is it the holy grail? Absolutely not. But I guarantee you, if you follow this method for 6 months, 8 months, a year, and really just let yourself get in and see that trading does not have to be as complicated as everyone makes it out to be, especially if you use some good money management and processes that allow you to have an edge in the marketplace. And that's all this does. Super easy way to approach it. Trade a couple hours a day at the most. And even there, you're only looking top and the bottom of each half of each hour. So makes it super simple to utilize and execute. So anyway, what are we looking at? S&P. So we've got our basket, right? We're always looking at the S&P, crude, and gold. The S&P over here is a mixed bias. So our 4-hour bias, which is the orange line and the blue line. Our 4-hour bias is showing us that we're long, but our 30-minute bias has started to roll over, and we've got a short bias in the 30-minute. So this could be the point where the market's trying to decide what it really wants to do. Does it want to continue pushing higher? Is it taking a break and it's going to pull back for a bit? Either way, when you've got a mixed bias like this, that's a quantifiable reason to stay out of the market. Instead of guessing and trying to figure out, oh, what's it going to do next? I think it's going to do this. My gut says it's going to do that. The talking heads say it's going to do something else totally. It doesn't matter, right? Find a reason to do what you're going to do and stick to the reason, and don't worry about what else is happening out there, right? So this is telling us we've got a mixed bias. It says sit on our hands. Don't touch it. Don't touch the S&P right now. What's happening in crude? Crude's got a long bias still. We said yesterday, my God, it's at 83. Can it go any higher? Yeah. It absolutely can go higher, and it did. We saw that yesterday. Market pulled back a little bit, so we were pushing up here, made a lower high and a lower low, which gave us that indication, hey, if things are happening, let's watch it. So we see here it's pushing up, pulled back, lower high, lower low. Indicator said, hey, check out. If this thing has some momentum on the next bar, we want to take it. Didn't move there. It still pulled back, made a lower high. Pushed up a little bit, then again, lower high, lower low. And that gave us the opportunity to get in, and we can see how that just continued to push right on up here into some potential profitability for you. And I always say potential because I don't know if you're taking that trade. It's the potential trading opportunity. It's only a real trading opportunity if you choose to push the button. So that it is what it is. You have to participate if you're going to reap the rewards. If you're going to take the risk or reap the rewards, you've got to participate. So anyway, we see that this crude pushed on, gave us potential profit there. Today, we still have a long bias, 4 hours long, 30 minutes long. We'd like to see the market pull back a bit, making lower highs and lower lows. And then if we can get that push of momentum breaking back out in the direction of that current market bias, we trade it. If it doesn't, then we don't do anything. We just hang back, all right? Gold's beautiful here. This run this morning definitely is showing some potential risk-off sentiment over here in the indexes. Gold's making a great push towards 19. We'll see if it can get there. I don't know. it did pull back yesterday, made lower highs and lower lows, lower highs and lower lows. This is beautiful, but it never did give us that push of momentum following that last candle, right? Where we got the lower high, lower low, we got the indication, watch it. It didn't break out. So not a trade that was a potential opportunity there for us. Today, it's really off to the races. And with, this wide of a distance between your top and your bottom, it would not allow us to trade it anyway because the risk would be too high unless you ratcheted down and took a smaller position size, multiple micros or something. But for right now, gold is a long bias. We'd like to see it pull back. It needs to pull back a bit before we can trade it. So again, gold as well. We'd like to see it pull back, lower highs, lower lows, and then that'll give us an opportunity if it does pull back and then break out back in the direction of its market bias, we could trade long. But for right now, we're just simply watching it. And that's all we can do until we get an actual quantifiable reason for being in the market. So there you have it. Not a whole lot more to say about that. I'm going to wrap it up here, and we'll talk to you guys tomorrow. See